Rio Tinto has fired a broadside at the federal government. It says Australia is an expensive place to do business and needs a more stable political environment. Despite those concerns, Rio Tinto remains confident on the long-term economic outlook. But that view is being tested with the latest data from China showing a sharp drop in iron ore imports. Neil Woolridge reports.
It wouldn't be a mining company annual meeting without a protest. This time, unions are arguing that Rio Tinto is shortchanging workers in Canada and they want Rio dumped as the Olympics medal supplier. However, a bigger concern for the company is the global economic outlook, especially in Europe.
I think the central bank in recent months have played it better because they've made more liquidity available. In fact, they've made so much liquidity available to European banks that the liquidity stresses have gone out of the system in the short term. But of course, they haven't addressed any of the fundamental challenges that face Europe.
And the picture from China is clouded. Official figures show China's iron ore imports rose 9% for the year, but fell 8% in April, suggesting the nation's economic slowdown might now be starting to bite.
For most of our products, the markets are still reasonably robust, and we're still enjoying prices that are much higher than they would have been, say, 5 years ago. They're coming off the boil that they would have been in, say, 2010 and 2011, but that's normal business cycle activity.
I think most people accept that Chinese iron ore is still going to grow. It's just that rate of growth which might decline. And certainly all the statistics that point out to sort of 2030 that Chinese consumption of iron ore is going to increase.
Here in Australia, Jan du Plessis says Rio's Pilbara iron ore deposit is the most attractive investment in the industry. But he warns that political instability and the high cost of doing business are significant headwinds.
The iron ore business in the Pilbara does well, but across the rest of Australia, the mining industry has not got an easy time at the moment. Costs have gone up tremendously because of inflation.
Something that you would have planned to have built 4 years ago might be 50 or even 100% more expensive to build now. So your dollar doesn't go as far.
Rio's grievances about Australia seem like a minor irritation, though, compared to a storm that's brewing in Africa. It's being reported that a group of Chinese tycoons are plotting to take away Rio's half share in the world's largest undeveloped iron ore deposit in Guinea. Last year, Rio paid Guinea's government $700 million after the previous regime cancelled Rio's rights to the project.
We've really established a good relationship with the government where for a while that wasn't the case. So I think the government of Guinea now, they understand and trust that we are committed to see this project through.
We're talking about Africa and sort of the Chinese sort of desire to want to invest all around the world and pick up assets. So, it makes for a great story, but the reality is probably far from that.
Tom Albanese says Rio should start production in Guinea on schedule in 2015. But still, the company and its shareholders will be hoping for a vote of confidence from Guinea's first democratically elected government to see the project to completion.